How do you make money off of the price of something dropping? Let's say the prices of shoes are going up, maybe Yeezys for instance. If you have a pair of Yeezys that are selling for $1,000 and the prices are moving up and up and up, you could buy them for $1,000 and then quickly sell them for $1,500. Now what you have is $500 in between because you bought it low and you sold it high, you made $500. But what a lot of people don't know is that there's strategies to make money when the price of something goes down. So if you took those same Yeezys that were at $1,500 and you thought, that's probably going to go back to $1,000, how would you make money on the price going down? This, my friends, is what we call shorting. Let's do an example. I have an iPhone here, and let's say I believe the prices of iPhones are going to go down across the world. I believe that these right now are selling for $500. I think an iPhone, I think all across the world, maybe they come up with news that holding it to your ear causes like ear cancer or something, and now all of a sudden nobody wants iPhones, the prices are gonna fall. So I'm speculating and I think, you know what, I think the price of an iPhone is gonna fall from $500 to $250. So chances are high that you have an iPhone, so I'm gonna borrow your iPhone. Beautiful. Thank you so much for letting me borrow this. So now this is your iPhone here. I just borrowed it from you. Thank you so much for letting me borrow it. I appreciate that. Now I have an iPhone, and if I look at my ledger, I have this asset, I own an iPhone, but I also owe you one back because I borrowed it, so I have to give it back at some point, right? But now this iPhone is worth $500. So I'm gonna go out into the market, maybe on Kijiji, maybe somewhere where I can sell iPhones, and I'm gonna sell this for $500. I'm gonna sell your phone for $500. Great, so I went out and sold it, and they deposited $500 into my bank account. So now, I have $500, but I still owe you an iPhone. So now what happens is it turns out, whack, I'm right. The price of iPhones went from $500 to $250 the next week. Wow, this is amazing. So now, I still owe you a phone, but now I can buy it for $250. So I go into my pocket and I take out my $250 and I buy your iPhone back. So now I have your iPhone. Thank you, sir. Thanks for letting me buy your iPhone. And now all I have to do is give it back to you. So now you have an iPhone back and I have $250 in my pocket. So if that didn't make sense, go back and rewind and listen to it a few times. But it's a complicated process, and that's how shorting works. People do this all the time. They do it with stocks, they do it with individual businesses, with commodities, with gold, with oil, with all sorts of things that change price. You can bet there's someone out there trying to short it or trying to take advantage of that. Now here's the risk. Let's go back to the step where I had sold your phone, but I still owed it to you. I still owed you one back, but I already sold yours for $500. Now let's say the next week comes around and the price of iPhones doesn't go down. I was wrong, it goes up to $750. Maybe they realize that iPhone cures cancer. Now the prices are gonna go to $750, and now the price is going against me because I owe you a phone, but I sold it for $500. Now I have to pay $750 to give it back. So I'm out $250. Now this is where shorting gets really risky because as the price goes up and up and up, you're getting squeezed and squeezed and squeezed until the point where you just say, cut it, I can't take it anymore. So now what happens is, I see that price going from $500 to $600 to $700 to $750 and I say, you know what, I'm out. Let me just buy an iPhone. So I buy one back for $750 and I'm like, hey man, here's your iPhone back, thanks for letting me borrow it. But now I'm down $250 because I sold it for $500 and I had to buy it back for $750. If you can remember what the difference is between speculating and investing, and if you don't, I'll post a link here that will show you what the difference is. Shorting can only be speculative because you're betting on the price changes. There's not a business you're investing in, there's nothing that's providing value to anyone. You're literally trying to make money on a price change. That is inherently speculating, which means for investors like me, people are trying to get wealthy over time, this isn't something I would recommend unless it works into your portfolio, unless it's a hedging strategy. And we can talk more about hedging in the future, but that's the topic of another video. As I always say, find out who you are as a person, figure out your risk tolerance and how much volatility you can take, build a portfolio that is designed for you and to help meet your goals, contribute to that portfolio over time, set it and forget it, let it do its thing, and over time you're going to do very well. So now you know what shorting is.